So back in March, which was the first month that I started my YouTube channel, at 198, I told you guys that I was looking for Amazon stock to get to 257, which from the time of that recording, we were looking at a return of over 30%. Take a listen. The next ticker is AMZN, Amazon. In my opinion, Amazon stock is currently signaling a great buying opportunity. With the majority of Americans shopping on Amazon, this to me is a stock worth looking into. So current support for Amazon is at 192. Below 192, your next support is at 186. Now above 192, you have resistance at 197, 201, and at 205. Once Amazon can get above 201 and stay above it, I believe the stock will have a run up to $257 per share. So after that recording, we did end up seeing a pullback which took the stock back down to 165. However, the stock was still inside of a bullish falling wedge pattern, which meant that any pullback below 195 was a great buying opportunity to then take aim at 257. Now with Amazon rejecting perfectly off 257, you guys can see that my target price was no coincidence. Also, and I hope you guys didn't miss it, I said once Amazon stock you get back above 201 and stay above it, that is when we would see that run to 257. And if you're looking at the current chart, you guys can see that is exactly how things ended up playing out. Now, how did I know that Amazon stock was going to go to 257? Well, it was simple, and it was not that simple. So basically, I was following the algorithm by using numbers, and based on what I gathered, after this pullback, the stock was to then head to 257, which you guys can see did not happen until after this pullback that I knew would set up a bullish reversal that would then take Amazon stock up to my price target at 257. Now last week I told you guys that if Applied Digital, ticker symbol APLD, could not stay above support at $33.84, then look for a 10% pullback to $31. Take a listen. The next stock is Applied Digital, ticker symbol APLD. So current support for Applied Digital is going to be at $33.84. If buyers cannot keep the stock above this level, then look for a 10% pullback to $31. And looking at the current chart, the day after that recording, you can see that the stock tried to get above my resistance zone at $36 and failed, which then resulted in the stock breaking below $33.84 and then coming all the way back down to $31. Now let's go ahead and take a look at the S&P 500. So back on Thursday, I told you guys that if the ETF fell below 668, then you should look for a pullback to 661, which is exactly what ended up happening. So now that we're back above support at 668, we now have a bullish setup, which means if the SPY can stay above 668, then this should set up a move to 673. And if we can get above this level and stay above it, then this should then set up a move to 680, which from current price, we would be looking at an increase of over 1.41%. Now to the downside, if the SPY does fail to stay above 668, then we're looking at a pullback down to 661. And if we break through 661, then look for a pullback to 658. Below 658, the next target to the downside is going to be at 652, which from current price we would be looking at a decline of over 2%. Overall, I am still bearish and I'm looking for a pullback down to 574 and then a pullback down to 532. Now Hightower Stephanie Link says that investors should be buying the dip. Take a listen.
The NASDAQ down almost 3% this week. The S&P down and Dow down about 1.5%. Stephanie Link is Hightower Advisors Chief Investment Strategist, Portfolio Manager. Good morning to you. So,
good morning.
What do? Is this a dip that you're supposed to buy? Is this a knife that's going to continue to fall? How do you think about it?
Well, we're getting the volatility in November, Andrew, that we thought we were going to get in September and October, because September, October seasonally are the weakest months of the year. And then it starts second half of October into the end of the year where you have the seasonal strength. I think you want to be buying the dips because the economy continues to chug along, and that is leading to better than expected earnings. Earnings are growing 12.5%. That is much better than historically the trend at 5%. And so I think that you use the volatility to buy some of the stocks that are getting hit. You buy some technology. I added to Meta. Last week, I added to Microsoft. This week, we had great numbers from Eaton, especially on the data center growth and orders. I added to Uber. They beat across the board other than EBITDA, but because they're spending to grow, and they are seeing growth. They just grew earnings 159% year over year, which is crazy good. Rockwell Automation, a very good number. And then I just added to Starbucks. It's a new position because I think that the turnaround is starting, and I want to be part of Brian Niccol and that whole team that's driving better results.
Well, guys, I do agree with what she was saying because, like I've mentioned earlier, we do have a bullish setup on the SPY right now, which could take it back to all-time highs to either form a double top pattern or a lower high just above 683, which would then fill this gap right here. With that said, if you guys enjoyed today's video, go ahead and leave a like, leave a comment, and let's get this video out to more viewers. Also, if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.